The EFG Hermes Managing Director for Frontier Equity Sales explained to CGTN's Ramanyang, Kenya's problems can largely be traced to its dollar shortages and an overvalued currency.
So as foreigners left the market, mostly because they were worried that they couldn't get their money. And you mentioned Nigeria. The issue is that because the Nigerian experience has been so harrowing, where people have had their money locked up for multiple number of years, 3 years and onwards, in queues waiting to get their money out of the country. So we just had no benefit of the doubt. So as soon as people thought that they could not get a dollar out of the country, they immediately started to sell. You'd rather be sitting in cash than in an investment and try and get your money out. Now, what we're seeing from our clients is that actually the repatriation issue has been eliminated. We don't have anyone who's complaining, saying that they have repatriation delays. Now, the key trigger or the key signal really to change that perception is the MSCI review. We're hoping that November would have been positive, but I think they took some caution. Also, I think because of the Nigerian experience, they gave them a little leeway earlier in the year, and those mooted changes haven't materialized yet. So they had to move them to basically off the index into a single market standalone status. So we think with Kenya, they're being cautious. Now, in another market that was troubled, such as Sri Lanka, we've seen as they've sorted out their FX issues, there's been a very, very large rally in the market. I mean, some stocks are up 40, 50%. So really, this is the opportunity for Kenya. So I would actually be saying to people, you can buy banks at 2 or 3 times PE. You can buy the telco Safaricom at a really cheap valuation. You have stocks trading at 3 standard deviations from the mean. So, which actually, when you compare against emerging and frontier markets, peers of Kenya, is an absolutely very, very large outlier. So there's a lot of opportunity in Kenya. The question is timing.
Timing is definitely one part of the equation, but if you're, a foreign investor, and you're looking at, for example, our FX market, the clearing issues essentially have stopped at this point. But I guess the other question some will be asking is, has the dollar shilling rate essentially hit a sort of stable equilibrium, for lack of a better word? Because you only get into the market, say at 155, and then the currency moves against you at, by 10, 15%, and you're not seeing comparable growth, right, in the share price, and then you essentially end up underwater.
You're right. I mean, and this is the uncertainty around the FX rate. However, starting to think that we are starting to come to a level where the shilling is going to be on, and I'm talking about economist models, fairly valued. Now, being fairly valued doesn't mean that the exchange rate doesn't overshoot. And usually exchange rates overshoot as they come to a value. So it may go over whatever we think fair value is, but eventually it comes down. Because the most important thing for the shilling is actually that the FX market is working right, and that people are able to go and show bids and offers and transact. And the central bank's been putting a lot of effort into getting the interbank market up and running so banks can trade amongst themselves. And that's just the grease that really oils all those cogs. And as that comes to fruition, then you'll start to see the shilling really start to come to where it is.
For the sake of argument, you are running this transaction and you're thinking about, okay, we've cleaned up the books, we have some data, some solid information that we can work with in terms of audited accounts, annual reports, etc., and, investors have been able to do their DD on, KCC, Kenya Pipeline. When would you think is ideal to bring these companies to market? First half of 2024, second half of 2024?
Look, I don't think there's any perfect timing, because if you sit around, you'll miss the market. The best thing to do is actually to start the process, to get your transaction advisors, get these companies fully audited, people to understand what is in there, and start marketing them to investors. And then you start to uncover what is the value that the market places on these particular assets. I mean, that's how it works everywhere else in the world. I think if you sit back and wait to time the market, you'll miss the opportunity. I mean, the most successful transaction, which was the Safaricom IPO, if you remember, came after an extremely difficult time in the country's history. And actually, at that time, most people would have thought, why would you put any money in Kenya? So I think you just have to get moving, because markets are very nimble, markets move fast. and there's also global competition for capital. So it may well be that someone in Nigeria, for example, might open up and might sort out the FX market, and suddenly all these dollars that could be coming to Kenya are now attracted to Nigeria, or Nigeria has privatizations, or it could be somewhere else in Asia.